Hi everyone, good afternoon all. I'm Nguyen and I'm the co-founder of CFTE. I welcome you to the webinar organized by Innovate Finance. Thank you for joining us today, and we hope you and your families are well and safe. The topic of this webinar is on open banking. Open banking, as you know, has been a revolution in FinTech and to the all wider to the financial services. But what's the future? So that's going to be the topic for the next hour. And before we start, I'd like to ask you, audience, to answer by using the discussion chat room. I'd like to ask you two questions. So I don't know if you can all have access and see the questions from the audience, but and I hope I can see your answers. So let's try. From 1 to 10, what's the impact of open banking today? So scale it, put a score from 1 to 10. So you can vote from the polls, and I hope I can see some answers from you. Does that work? Okay. Very good. So I can see that on the scale of 1 to 5, let's say, what's the impact of open banking today? If you can share your answers with us. There's 23 votes. Very, very good. So I'll share the results that we have. So we have 38% give a score of 3, which is the highest. Then we have 3. So that's the score, 39%. So thanks very much. Thanks very much for answering the question. So you guys are a few hundreds today, which I'm very glad. So my question was on the scale of 1 to 5, what's the impact of open banking today? And the highest score is 40% with a score of 3. My next question before we start would be from 1 to 10, what will be the impact of open banking in 3 years? So what's your take on that? So if we can move it to the next question. Can you see the next question? Perhaps just check. I don't know if you can see the answers on the scale of 1 to 5. Otherwise, we can leave it to later. But thanks very much for participating. I think it was very valuable. So yes, of course, 1 low and 5 being the high, of course. The new poll is there, so I'll probably get. So on the scale of 1 to 5, what will be the impact of open banking in 3 years? One being the low and 5 is the high. I'm not able to see the answers. Questions from the audience. Yeah. So 1 being the low and 5 being the high. I'll check with the answers later on. Let me introduce, thanks very much first, for participating and for giving your answers. So let me start by introducing myself. I'm Nguyen, and I'm the co-founder of CFTE, Center for Finance, Technology and Entrepreneurship. We are the largest corporate university in FinTech and digital finance. We design online programs to help and upskill professionals for them to find opportunities. We're based in the UK, Singapore and Hong Kong. And I'm a great pleasure to introduce you to the 6 speakers we're very lucky to have. First, Felicia Meyerowitz, Singh, CEO and founder of Akoni. David Beardmore, Ecosystem Development or Open Banking Implementation Entity. We have Laurie, CEO of Visible Capital. Emily Reid, Partner and Head of Financial Services at Hogan, Lovells. And then Chris Gorst, Director of Nesta Challenges, and Seaton, CEO of MoneyHub. Thanks very much for joining us today.
Great to be here.
And so before we start, in 1 minute for each of our speakers, can each of you tell me your involvement in open banking? So in 1 minute, if you can tell us your involvement in open banking. And perhaps I'll start with Felicia.
Thanks, Tram. So at Akoni, we provide a cash marketplace and a cash platform with various tools to manage cash, both directly for businesses and charities, as well as on a white label basis for advisors and channel partners like SME hubs, accountants, and lending platforms. So we use open banking for a range of the cash planning tools. For instance, we pull in the data and we do an analysis, and we provide an automated cash portfolio recommendation based on your historical balances, as well as we look forward through our own types of cash planning tools. And then we use it in other different ways to help some of our channel partner clients like advisors with their end clients.
Thanks very much, Felicia. David, if you want to spend a minute, please.
Thank you. Thanks, Tram, and good afternoon to the audience. Going back to my involvement in open banking, I think September 2016, I sat in the conference room at St. Paul's and listened to Bill Roberts from the CMA launch the Making Banks Work Harder for You report. And ever since then, I have been a passionate supporter of open banking, both at the Open Data Institute, where I was the commercial director, and now as Ecosystem Development Director at the Open Banking Implementation Entity. For me, this is my role. It's all about adoption. It's all about use cases. It's about benefits to consumers and to businesses to make their lives simpler and easier, being powered by open banking. So everything that I and my great team at the OBIE do is geared up towards making it easier for consumers and businesses to make use of products and services that are powered by open banking. Thanks.
David. Ross?
Thanks, Tram. Hi, I'm Ross. Laurie, I got involved in open banking, I suppose, really through sort of friendships and people that I knew through working in financial services. I initially agreed with what David said. I think it was really important in the outset to sort of try and show what you could do with it. And I got involved in setting up the Open Banking Excellence meetups, which Helen now runs mainly in London, and some of you may have tuned in for last night. On a work level, I run a company called Visible Capital, who are using open banking technology, or the legislation and the I suppose the plumbing that's being designed by the guys at OBIE to use banking data to help power up the wealth journey within the sort of pensions and investments market.
Thanks very much. I'd like to invite Emily, if you want to share about your involvement in open banking.
Yeah, thanks. Hello, my name is Emily Reid. I head up the financial services practice at Hogan Lovells, and I also lead our FinTech mentor program. My particular practice focuses on payment regulation, amongst other things. But for that reason, for the past 4 years or more, I and my team have been very heavily involved in advising on the regulatory framework for open banking. And we've been very fortunate. Our client base has included the Open Banking Implementation Entity, incumbent banks who have been obviously required to open up their accounts, their payment accounts to third parties. And we also advise third-party payment providers, large and small, on the potential of open banking and the wide range of use cases that come to us for consideration. And I think that is the most exciting part of my job, is looking at these new use cases, which I can honestly say I don't think were ever imagined by the regulators when they designed the framework, and working out how they fit, and if they don't fit, then working out how they could be made to fit in order to launch a very innovative open banking product.
Thanks very much, Emily. I would like to get Chris, please, to tell us a little bit about your involvement in open banking.
Thanks so much. So I work for Nesta, which is an innovation foundation, I think possibly the only one in the UK, and we exist to support and stimulate innovation for public good. And as an organisation, we've been interested in and excited by open banking, again, like David, pretty much since its inception, because we see it as something that could help to address some of the kind of long-standing problems in the way that retail financial services work or don't work for many customers. Specifically, we have run 2 pretty sizable innovation competitions, or challenge prizes as we call them. One of them is ongoing. It's called the Open Up 2020 Challenge. And through those innovation competitions, we are finding and boosting some of the most innovative and exciting innovations that open banking is enabling. So it's a really exciting place to be. We get to see both what's happening on the policy front, but also on the innovator front.
Very interesting, thanks. And finally, Sam Seaton, if you can share a few words explaining your involvement with MoneyHub.
Yeah, so thank you. Well, for me and more widely MoneyHub, it's all about open finance. So I and the team at MoneyHub want to make people's money go further and work harder for them. And the way that I guess we've focused on having the most impact on that is to provide companies with a platform that they can embed, just like Intel inside, so that they can really leverage the power of open finance, and obviously part of what underpins that is open banking, so that they can achieve a step change in the way that they interact with their customers. And really what drives that is the fact that growing up in Towers Perrin and eValue as I have, I got to see the way financial services takes products to market, and I just felt that the consumer, the ultimate end consumer, so people like us, have absolutely no hope of actually understanding financial services in any way, shape or form. And it's nothing to do with people's inability not to be capable of doing that. It's just too muddy. There's no transparency from beginning to end. It's layered with intermediaries, and it's really not possible unless you are obsessed, like this group on this panel will be, with financial services. So as a result, I'm on the pensions dashboard because I feel very strongly that the pensions dashboard is another mechanism to throw into the pot in terms of getting better transparency, clarity, control for people over their money. So that's really where I fit in.
Thanks very much for all of you for this. Let me start with my first question, and it will be to all of you. So I would love you to spend quite a bit of time, and it's what have we achieved? From your opinion, what have we achieved in open banking? If you can give concrete example of what worked, what didn't work, or what doesn't work, and it's less to do an état des lieux from all of you. And perhaps I will start with the same, Felicia, and then we can start from there. But whoever wants to jump, because it is also a discussion, can jump. But it's an état des lieux that we want to do. So what have we achieved in open banking? Felicia, please.
Well, I'm going to leave it to David to give all the statistics, because I think the OBIE is deserved of that. I'm just looking more at the qualitative side. I think we're really right at the beginning of the journey, that what's been achieved to date has been substantially changes in terms of the technology, the innovation, the use of data, not only open banking, as Sam mentioned, open finance, because customers look at their lives and their financial well-being holistically. They don't look at only one small component when they think about decisions. And so for me, while there may have been significant use cases and volumes to date, actually the true transformation and the true impact really, I think, will be felt over the next 3 to 5 years, in particular as more solutions are rolled out on a B2B to X basis, or as Sam calls it, the Intel inside the organization, where there are, massive distribution impacts. So I already see us as the beginning of that journey.
Sure. Perhaps, David, you want to share some figures?
Sure.
Yes, and Felicia
Sure.
was mentioning. Thanks.
Yeah, let me jump in there because I agree with Felicia. I think we have done a great deal, and I think there's a great deal still to be done. And I'd be surprised if anybody else on the panel has a different view to that. In terms of what's been achieved, I think the crucial thing that has been achieved is the framework, is the foundation. I hope for open finance has been laid. And I say that from two perspectives. One is around standards, and the other is around services and products. On the standards piece, any FinTech knows, or in fact any innovator knows, that if you want to build a great product and you want to go to the main, as we would say, the main high street banks, the big financial services institutions that dominate, in order to get data, without a common standard, that becomes a nightmare. It becomes so difficult that you probably just give up in frustration. And I think one of the great things that we have done in the open banking world is create the standard that makes access to the necessary data, the data that makes these propositions fly, makes this data consistent. This makes it easier for developers to build products. It means it's safer for use, so they're not having different entities using different data fields, and it also allows for regulation and monitoring, which protects everybody. So I think on the first piece, I think is the standards are there, and those standards can then be grown and become extensible into other areas as we move into open finance. The other thing that we've done is around services, and at the heart of the services piece is the directory. The open banking directory, which really, although some think it's just a list of organisations that are taking part, that's the trust framework. It allows the ecosystem to connect safely, securely, and to get data between us. So those are the two foundations that we've built, and those are really important because they are capable, and in our view should be, extended as we move from the sort of narrow confines of the CMA order around open banking into something that's more akin to open finance. And what we also achieved, I think, now is we've built an ecosystem. It's not complete. There are more added on a daily basis. But now we have well over 200 regulated providers. More than 70 of those are account providers, bank, ASPSPs, banks. There's more than 130 of those are innovators, TPP, third-party providers. And of those, probably getting on for half of them have already got one proposition that's live with customers now. So, have we finished the job? Absolutely not. But have we built a good foundation on which to deliver the original ambitions that Bill and the CMA set out when we heard them in almost 4 years ago? I think we're well on the way to that. And then in terms of the discussion of this webinar around how do we move from open banking to open finance, I think we've got the foundations in place that make it much, much easier for us to extend into open finance.
Thanks, David. Emily, would you like to share as well?
Sure. I mean, I agree with both Felicia and David in terms of the time frame, and also the fact that the work done on open banking so far will be an excellent foundation for broadening out into open finance. This question about what have we done with open banking to date gets asked very frequently. A lot of people sort of think that nothing's happened. It's all been a bit of a damp squib. And my response to that is that I think we're seeing the tip of the iceberg. As I said at the beginning, the thing that's impressed me is that the regulatory framework and the technology is being used in ways that simply weren't imagined, I don't think, when the legislation was written. And so I think we're beginning to see some of the use cases that will really change people's lives and improve their financial literacy, their access to products. I think we've seen that already in terms of lending decisions. We're seeing use cases that really help people working in the gig economy manage invoices and payments from their customers and so on. So I think that whilst those people who aren't really in touch with this sector don't see an awful lot of change, I think the change is happening, and I think 3 to 5 years is probably the right sort of framework, right sort of timeline in which we'll see that sort of coming through.
Yeah. Thanks. I see more people are joining us just now, so I will just share the question. So the question is that what have we achieved, and can you, all of you, give us concrete example? Let's do an état des lieux. We had the views of Felicia, David, Emily. I'd like to invite Ross also to share. What's your take on that?
Hi, thanks, Tram. I think open banking has done really quite well, given where it starts from. You know, if you think about any of us that worked in financial services or use financial services tend to use the things that are driven by customer demand. And open banking really came, its genesis was in the sort of PSD2 legislation. So I suppose it's always been a bit of an uphill struggle to then sell something to the customer that they didn't know they wanted at the time. So I think that's been really useful. And I think it has been very useful in sort of paving the way, as David said. There's been lots of good examples, actually. Of course there has. I mean, especially in the credit side of the market for people using affordability scores and actually understanding where they spend their money rather than, you know, existing systems of credit reports and things. So that's been really useful. But I think, as Felicia says, once we actually start seeing more business-to-business use and sort of demand-driven use of open banking, that's where we'll start to see things move on. Sam mentioned the pensions dashboard, and it's quite interesting because, of course, that's had, I think, around 200,000 signatures from the public saying we want this. So it's not got an easier ride, but it starts from a better position of demand. So I think once we actually start seeing more customer demand for it being used, both at the end user and the business side, we'll then start to see it take off, and the timescales seem to be running as I would expect.
Very interesting. I'll get Sam or Chris, if you can share also your views on of what's been achieved in open banking, and with concrete example, that would be amazing. Sam, please.
Yes, I mean, I'd just like to follow up with what Ross just touched on before I get excited about what has been achieved, which is that it's a really good point that Ross made about the fact that this is not consumer driven. I mean, this is consumer driven in terms of the benefit for them, but it's driven through legislation, and it's driven to make a market that has been quite closed much more open. And you know, that's where the term open banking comes from, and open finance. And you know, that is, we can't lose sight of that. And I mean, we've got lots of different examples in the past where, you know, if we went back in time, I mean, obviously horses and cars, you know, we weren't around then, but actually, you know, the car was not seen as anything innovative at all. You know, to most consumers back then, the car was seen as an incredibly backward step. And yet, within a very short period of time, you know, there were no horse and carts, you know, gone completely to the car. And I think that's the point that Ross is making, really, is that it's coming from a different angle. You know, the same thing. I think if you told me when I was using my BlackBerry, you know, that I was going to, you know, use a touch screen, I think I'd have probably told you're crazy. I'm not coming off my keyboard. In fact, I think I got dragged kicking and screaming off my BlackBerry keyboard. But it just goes to show that things that come in from left field, like the App Store and things like that kind of, you know, and music, you know, on demand and all the things that it's not possible for consumers to really put together. That's what open finance is all about for me. And so it's up to us as the industry, and for the people on this panel, and probably for most of the people that are listening to this, it's up to us to take that to the consumer and create the value exchange. And just to go on to a couple of examples that is happening, which I find fascinating, because they're probably a little bit different to the mainstream uses of open finance or open banking. So one is an open banking enabled retirement modeler, so enabling you to see retirement provision, but based on what you spend now. So rather than just doing the blanket, well, you'll need 50% of your income when you retire, or you'll need 2/3, or whatever it is you want to pick as a sensible starting point, it can actually say to you, well, let's have a look at what you spend now, what you're not likely to need to spend in retirement. For example, your mortgage and maybe not so much travelling. And it's really fascinating to see that, it's unlikely that you're going to stop eating out if you eat out a lot. It's unlikely that your obsession about, some of your hobbies is going to literally die in a ditch overnight when you retire. So it's really fascinating to try and get engagement in the retirement world by linking what you're going to do in later life to what you do now. So, I don't think we saw, well, actually, I didn't see that coming. I didn't see the connection and the engagement you'd get by linking how you spend your money now with that. So I think that's a brilliant use case that's live. The other one, which I think is brilliant for all the retailers, which are really hurting at the moment, which is to do with a lot of the employers have a lot of benefits. So their flexible benefits programs that they have a lot of really good deals on various retailers that they've done, massive, large-scale discounts with. And at the moment, many employees, of which I was one of them in years gone by at Towers Perrin, where I think we had more than 300 benefits, available on the platform, of which I didn't really think I looked at any of them. And that's because we don't have time, and you've got to go trawling through to find which ones might be of benefit to you. And I think what's magic about what has gone live recently is whereby if you link up your main form of spending, where if that's your credit card or if that's your joint account, it doesn't really matter where it is that you do most of your spending, it will match the 300 benefits that are available on the platform to you and tell you how much you could save by taking the top 3. And it tells you what it means for you. So for example, it might mean, I could have saved £110 last year if I'd taken advantage of the Curry's discount voucher. And there's no way I'm going to, go bothering to look for stuff like that. People don't have the time. So I think that's another fascinating way. And then also one that's just about to go live is to manage your landlords. So to manage so all the landlord people run properties, not really the commercial organisations, but I guess the equivalent of the SMEs. So we call them landlords that have kind of unplanned landlords, people who sometimes got married and had properties that they haven't sold from before, so they've got 2 properties that they now managing, or also the accidental landlords that just end up having other properties that they think is a good idea to form part of their planning for the future in terms of retirement, and having the ability to manage all of those portfolios and actually submit your tax return, understand the actual the yield and the return, all the expenses associated with them. Yeah, so there you go. So there's 3 that I thought I would just share. So as much as we'll get very depressed about maybe the speed at which open banking and open finance feels it's on a slow mode, I think underneath the scenes there are some amazing things going live and getting traction in the market.
Now, very interesting, very concrete example. Thanks very much, Sam. Chris, what's your view on this? Can you? Yes.
Yeah, I kind of second what Sam was saying. I mean, one thing that's been achieved, frankly, is a pretty phenomenal response from FinTechs in the UK to this regulator-driven opportunity. I can't remember the latest numbers, but I think there's something like 300 organisations registered to provide open banking services. But even that underestimates the number, because a lot of people are a lot of businesses are accessing open banking indirectly. So that's been super impressive. The flip side of that, though, is from the consumer perspective, things haven't settled down yet. That can be a little somewhat confusing. If you're not an open banking geek, then navigating your way through all of the amazing innovations that are coming forward can be a bit tricky. So I think we're very much still in a kind of experimental phase of innovation of open banking, and we haven't yet kind of necessarily cut through to the public's imagination. I think the other thing I'd highlight in terms of what's been achieved is I think we've learned a lot. Open Banking Limited has learned a lot, and all of the other players involved have learned a lot about how you implement this kind of thing, and that is going to be incredibly useful in taking the open banking model to other bits of the finance and indeed beyond finance.
Thanks, Chris. I see a lot of questions from the audience, so I'll jump in one. I'll choose one or two. Perhaps this one I like, how better, let me just go, how better are consumers and businesses financially since open banking? Have we seen quantitative data showing it has been beneficial? And perhaps I'll get David to share your views on this question.
Yeah, sure. Yeah, I like this question. How much better off are the recipients, the consumers and businesses, since open banking? And specifically, the question asks about if there's been quant evidence to back that up. I think, in common with lots of the other panelists, I think we need to keep remembering we're at early days here. Yes, there's lots of impatience for transformative examples, but we don't have many of those yet. We're getting towards it. There are some things which still haven't yet taken root. So there's lots of planning in the open banking world around payments, for example. That, I think, will have a significant shift eventually, but we're still at very early days in that. So in terms of, this is really harking back to the use cases that Sam and Chris and a few others mentioned. I think there are lots of anecdotal evidence of tremendous savings, of great opportunities for consumers and for businesses to benefit through open banking. When open banking launched, we initially saw lots of account information, AISP products and services around better budgeting, around helping businesses and consumers to better understand their finances. But quickly, we saw that moving into actually doing something about it. And I think when we get to things like account sweeping, where your current account, maybe you have a young person that's got it on a tight budget and gets towards the end of the month and typically regularly dips into the red and gets hit with overdraft fees, and yet has got a savings account that perhaps mum and dad put there, or they've just acquired and built up and have a savings account maybe either with the same financial institution or oftentimes in a different one, and it's just sitting there with, I don't know, £200 in it that's just sat there, month after month, not being used. Wouldn't it be clever? Wouldn't it be good if the current account could predict, or if the TPP could predict that the individual, whether it's a business or a consumer, is going to run out of money, go into the red, get hit with overdraft fees? Wouldn't it be clever if, rather than doing that, it could predict that in a couple of days beforehand, either through an alert and a trigger or a pre-agreed set of limits, pull the required money from the deposit account, the savings account, stick it in the current account for 3, 4, 5 days, whatever it takes until they get their wage or their salary at the end of the month. And then once they're back in credit, stick that money that was taken from the deposit account, stick it back in there again until it's there. So it's not using up their savings, but it's making good use of. So if the question is, would a consumer be better off if that happened? I think the answer is a resounding yes. And yes, we could quantify that by seeing what the cost of that sweeping service versus the cost of the unarranged overdraft. And lots of these examples equally apply to a business. So in these challenging times, particularly where cash flow is usually the thing that kills small business, not bad ideas, but cash flow. Again, the same principle that if that business were able to sweep from an alternative source of funding to cover them while they're waiting for their largest client to pay them their most recent invoice, that would have real financial and material benefits there. And the final one I would just throw out, I love seeing some of these apps that are helping the vulnerable, those who are struggling with debt, get a grip of and get a handle on the income and the expenditure that they have as a result of open banking, maximize the use of the debt advice time that they're given through Money Advice Service and other providers, so that they actually make real impact into managing their debt. I won't list out the names of them because there are lots of them, but you can see them very easily. There's a few I think that make a difference. And sorry, to answer the final part of the question, do we need quant evidence and research? Yes, absolutely we do. And I'm sure that we will, through the ecosystem, see that evidence come to light so that we've got some real hard metrics around what I know is the success so far.
Thanks, David. I see a lot of questions, so thanks very much. I'll try to get a few of them. And the next one would be proven success stories for win-win business models, where both the banks and the fintechs gain from this implementation. Are we talking about collaboration, both in terms of risk, but in terms of revenue and cost return on investment? So this is my question, and perhaps I'll start with Felicia, and please, Sam, Ross, Chris, Emily, feel free to jump in.
Sure. So relating to the collaboration, I think there's a number of types of collaboration which benefits customers. Obviously, banks have got distribution, but yet are slow movers relating to innovation. So there's no question that those collaborations benefit the end customer, whether that is a business or an individual like many of us on the call. But the further collaboration is also, which wasn't mentioned in that specific question, but I see it in some others, is between fintechs themselves. So, for instance, even our business, I've mentioned previously, we actually work with MoneyHub already, as an example. So we're two fintechs that have found a way to work together for the benefit of the end clients. I see that will increase. Obviously, there's even more caution on the parts of the banks now in this market because of the uncertainty, and they want to make sure that whatever fintechs they partner or collaborate with will still be around, so that all of that, their intellectual property that they're leaning on is very heavily protected for their customers.
Thanks, Felicia. Anyone wants to add on that? Okay, I see a question. On a lot of initial chatter a lot of people talk about deposits flying out of established banks to other players such as neobanks. Do you guys, do you feel that this is still yet to come, or is it a future or more a collaborative one? Any good example of incumbent institutions delivering true innovation? And perhaps Sam, if you can share on that. And Ross, Chris, Emily, David, feel free to jump in as well with Felicia.
Yeah, thanks, Janet. Just on that one, I'd recommend that people take some time to listen to the video that Angela Strange. You can find it on YouTube if you search for Angela Strange. She's a partner at Andreessen Horowitz, and she has a video on every company will become a fintech. And it's 20 minutes long, so you'll need 15 to 20 minutes. But honestly, the person that asked this question, or for those that are interested in understanding this a bit kind of wider than the banks, because the question is, you know, have we seen the banks move to the neobanks? And it's like, well, that's all about banking, but this is about open banking and open finance. So my view is that where this is heading is really about all companies being able to do finance in a way their customer base like has never been possible before. I mean, I think it's been touched on in this call already around the sweeping mechanism, but anyone's going to be able to do that for their customer. I mean, not just the banks, not just the neobank, any company. I mean, Nike, if Nike wanted to help someone save up for a pair of trainers, they could help them do that by sweeping spare cash into a savings account for them, and they don't need to be a bank anymore. You can do it with the customer's bank, and they won't care who the customer banks with. And I guess that's what I think we're missing here in terms of what's actually going on, and we're focusing in on the banks, and I think we need to be focusing in on actually the companies that have got large distribution with customers and where they're used to dealing with them. So, you know, Nike is really good at dealing with customers. I would argue much better than any company in financial services whatsoever, just because that's the only way they live is by interacting with customers right at the coalface. And they're one of thousands of companies that live and die at the coalface with the consumer. And I think that is what we're missing, is we're obsessing about the banks, the neobanks, the fintechs. But I think we should be obsessing about companies that are used to and good at relating to their consumer. That's where open banking is heading.
Thanks, Sam. Felicia, you wanted to add on this as well with regards to deposits and
yes.
activities?
So just separately to Sam, just addressing what we're seeing relating to deposits specifically and a flight to challenger banks. In fact, during times of uncertainty, cash tends to travel en masse to the bigger banks, typically. So that's just relating to the deposit side. And what we see is that tools like, driven by open banking, obviously the customer doesn't know that it's an open banking tool, but tools that such as MoneyHub or Akoni or various others that have been mentioned in examples, then can help that allocation back towards the challenger banks. I don't think there'll be any flight away from large banks towards challenger banks. We don't anticipate that kind of trend in this market, and we haven't seen it. But tools like ours can easily spread the risk across the bank, so you're still within your government protection limits and can automatically reallocate that for you. So we think that that's essentially, it's like democratizing what a large treasury global company would have and do, but democratizing that for individuals and for small businesses.
Thanks,
I could add something here.
Yes, please, Sam, please add.
Yeah, I think the concern here was, and it sort of goes to the competition objective of the legislation to start with. What open banking does is really make it important for the major banks to compete more for their customers than they have done in the past. And I think what this question is one example I suppose that this question might be getting at is say the launch of Marcus Bank with a completely sort of standout interest rate for its savings account. If you've got significant numbers of customers who have using open banking to sort of automate the maximisation of their deposits, then you can see that those would be pulled out of savings accounts with banks that are offering lower rates and be lodged with banks with higher rates. And I think that was sort of part of what the concern was all about, and that ultimately that would result in a sort of an impossible position for the major banks to sort of compete with. But I don't think a run on the banks in the sense that we would recognise that in terms of a financial crisis, because as I just said, I mean, when people are worried about their money, their funds tend to go in the opposite direction.
Thanks. I'll get, I think Chris and Ross wanted to add as well on that, and then after that, I know we also have a few minutes, and I want to add a lot more questions. We have some questions from the audience, but Ross, Chris, would you like to add on that?
Just briefly, as Sam mentioned, the point of the open banking legislation, certainly in the UK, was it wasn't supposed to be for all the banks. It was supposed to kind of break open the banks, as one CMA person put it, and to thereby kind of change the way that financial services work and made them more consumer centric. And I do think there's a risk, actually, that we haven't talked much about, of the banks being in a position where they just kind of pick off innovations kind of bubbling up from the FinTech ecosystem and then kind of taking their pick of the ones that really work, because that's certainly not the intention that the CMA had for open banking.
Sorry, it's Ross here. Just to add on to, just going back to the original question about the benefits to business or the consumer, I mean, the whole, when you look at finance as an ecosystem, the best ecosystems work when everyone benefits, when they're symbiotic. So we've already seen some benefits to the consumer, too, as I mentioned before, some of the credit stuff, and some of the other examples that have been talked about earlier. We're working in the sort of the advice and pensions and wealth space. The more time that we can allow the advisor to spend with the consumer by getting rid of a lot of the manual process that we have at the moment, of course that's going to be a more benefit to both the business and the customer, because the customer is going to get more of the advisor time and the advisor is going to save money on all the admin they have to do. But to Sam's point on, going right back to the start, in fact, of what it paves, and to my point of where it came from a legislative point of view rather than a customer point of view, I think in all of this, we have been focused a lot on, and certainly within our sort of echo chamber, of sort of financial services, trade magazines, and these types of forums, maybe on the benefits of the business and things. And I think what this is maybe pointing at, and what we're seeing with some of the work that we're seeing in the pensions dashboard move towards open finance, is that we maybe need to start thinking about how we put the customer at the centre of all this, rather than trying to solve the sort of business and legislative problems. There's been a lot of work around federated identity models, which are now carrying a lot more sort of credence within the sort of the regulators and whatnot, how we make this work. I think until we actually solve how we allow the customer to have more access to their own data, which was the genesis of PSD2, but actually give them ownership of it and store everything else in there that we've talked about on this call, whether it's assets they have, credit they have. Let's help them build personal balance sheets, and then everyone else in that ecosystem can then offer their own part that benefits that once we've got that one central version of the truth.
Thanks, Chris. My next question, we talked a lot, but my next question is very current situation. I mean, it's the current situation with, of course, this COVID-19 crisis. And my question would be to all of you, what COVID-19, from your point of view, is changing to open banking? How the open banking ecosystem has responded to the COVID-19 crisis? And perhaps, David, if you want to start, and then whoever wants to jump. Yep.
Yeah, I'd love to, because this is very current for us and very topical indeed. We at the OBIE, we're in the fortunate position of being at the sort of hub or the centre of the ecosystem. So we get to see what is happening across the CMA 9 banks, but also the TPP community, but also lots of others who have an interest in open banking. And what has been really heartwarming and really encouraging has been the way in which the wider open banking ecosystem has really made things happen in this COVID-19 example. What we did, because of the position we're in, we started, I think it's about a couple of weeks ago now, pulling together, maybe just to shine a spotlight on these great things that are happening. And we coined the hashtag, or we used the hashtag, the power of the network. If you search for that power of the network, you should see it. If you look on our open banking page, you'll see it all over there. And we have a page that is dedicated simply to highlighting the examples that anything from huge companies on there, big multinationals on there, right through to tiny TPPs that are doing things. And what's brilliant is that they're either creating new products and services specifically to deal with the issues that are thrown up by this COVID-19 crisis, or they're adapting things. I think my last count this morning, there are 24 different organisations and different entities that are on there, some from the panel already, Akoni and MoneyHub, and many of the other organisations that we've talked about. And the brilliant thing is that these are all, A, they're all powered by open banking, but B, they're all live in market now and doing something specifically, tangibly, to make life better, either for consumers or for businesses. So we've grouped them, and we're looking at things like the CBIL loan accelerations. There's a whole bunch that are around supporting the SME community, which is in a particularly challenging spot, I fear. There's a lot around income verification. One of the great things, I think Ross picked up the point about not wasting time when you've got an advisor spending huge amounts of time gathering data. Well, open banking, allowing you, the consumer, to give access to a trusted, regulated third party to be able to look at your account data just means that you can then have so much more time spent on advising the client, individual, rather than checking, should this really be £50 or is it really £52? What did you spend this ATM transaction on? All of that gets automated, so the time can be used effectively. And so look on that web page, Power of the Network, and you'll see them. The final bit I would just say is that, again, because of the privileged nature of the organisation that we are, we have access to government. So the trustee of OBIE, Imran, and others are regularly talking now with the FCA, with the CMA, with Treasury, with HMRC, with BEIS, and taking these examples that we're showing on the Power of the Network page on our own site, and using that to argue the case with government. So around SME support, for example, or income verification for the self-employed, I know that there are solutions from the open banking world which will do this more accurately and more quickly than the tried and tested methods of going through the infrastructure that we currently have set up. So I'd encourage you to take a look at it. Send things to us if you've got them from the audience.
Thanks, David. We'll look at the website. Emily, what's your take on this? Have you seen if any COVID is changing to open banking? Have you seen anything with your services, with your activity? Sorry.
Well, actually, I thought that David gave a very good summary, because I think what we would say is that it is the better and faster access to data that is able in a crisis to find solutions and provide support. So we've seen the COVID credit initiative, which might launch at some point, enabling small businesses to provide evidence of income in order to be able to claim government support. It's also just enabling lending decisions to be made that otherwise might not get made. And this, I think, goes back to the financial inclusion point again, that what open banking does is really enable customers who in the past have been excluded from good products and services to be included, because they can, through open banking, demonstrate their ability to support loans and other products. I mean, I think there's just one other thing, which is, I think the crisis has led to even more sort of evolution of the gig economy. And we've got a lot of people now providing services remotely, and open banking is enabling sole traders, people like personal trainers and others like that, who are sort of reinventing their livelihoods to be able to work remotely. Open banking is enabling them to invoice their clients and give them a payment link so that they can be paid directly in sort of one message, which I think is will really, really help anyone who finds themselves unable to have direct contact with their customers at the moment.
Thanks, Emily. Anyone wants to add on this? Sam?
It's Ross. Oh, sorry.
Ross? Yes, please, Ross.
So I was just going to say there was some. There's been quite a few examples of certainly a lot of the FinTechs sort of working together to try and solve some of the problems that we've got coming up, especially with the sort of financial fallout from the lockdown economy that we now have. And it was the guys from Wales Bank and Credit Kudos were talking through some of the examples they've got on the call last night to enable certainly businesses and things and individuals to sort of move into the sort of credit systems that we're going to have to use. The interesting thing is, though, I suppose being selfish about it, is that this has accelerated quite a lot of change that we've been in the technology world. We've been waiting on this to happen for a while in terms of, now being able to use video conferencing that actually works and things like that. So, as much as open banking has been some help to, or could provide some help to the COVID finance problems, COVID has probably been more help to open banking on balance. So it'll be quite interesting to see how it plays out. But certainly, looking further down the line at open finance and truly open finance, this is sort of posing some questions around what the future of money and cash and things look like, and we're seeing a lot more discussion now about government-backed digital currencies. So there's a lot to happen in this space over the next 12 months. Not looking into champion pandemics, but it's proven a symbiotic ecosystem again, where both are going to hopefully benefit each other.
No, thanks. So yes, you're totally right. So talking about open finance, and very much is it too early to talk about open finance? In what extent are we widening the scope of open banking to other activities? Can you guys share what's your take on that, about open finance? I'll start with Felicia, perhaps, and Sam, and then you can go, because we have 5 minutes, and I want everyone to start sharing. Yes, 5 minutes.
Right, so I'll focus more on the SME side, because Sam is certainly the expert on the consumer side. So from the SME side, open finance takes many forms. So obviously, businesses are very heavily reliant on accounting data, in addition to banking data. And we also see that we look at data across other sources. So even when we do a beneficial ownership checks, anti-money laundering checks, looking at assessment of risk. So we use data from multiple sources in order to actually make prompts and suggestions around products. We even have a product around business banking that focuses on trade data. And that then helps banks identify, cross-border payments opportunities, which then could integrate with a cash payments hub. So we think that, first of all, open finance is here in some form or the other already. It's just not as widely recognized. And also that it's just going to continue. For us, more and more data is going to become open, and that's going to deliver to consumers and businesses more and more benefits. I'll head over to Sam now.
Just quickly, because I know we're running down the clock.
Yes.
Just to say that we're in quite a good position, because we do to a lot of enterprises who are rolling it out to kind of large distributions. We see quite a lot of cross-section of the consumer. And what's fascinating with open banking is we've seen two main things happen. So pre-open banking, there was a lot of what I call different technologies used to bring people's accounts together so they could see them. And then open bank, and people were genuinely a bit skeptical of whether that was safe, sensible. And so we saw something like a 75% time lapse as to how long it might take someone to connect their first account. So like, in the first month. And then open banking hits, and the first account is connected is the exact opposite in terms of stats. So now only 25% will take a month to connect their first account, 75% connect their first account immediately. So we saw an immediate change on that basis, but then going further forward, what we're getting now is, why can't I connect my mortgage in the same way? Why can't I connect my, insurance, my protection policy with Aviva? What we're getting is, why can't I do it? Like, people don't understand why it's limited to a current account or a payment account. They don't get that. They just think, well, this should work for everything I've got, shouldn't it? So I think, back to Ross's point earlier on, I think that consumers will start to drive this behavior more.
Okay, no, thanks very much. I think that we have not a lot of time, and I would just want to finish. I know it's a big topic, and we have quite a lot that we wanted to discuss, but we have a lot from you, so appreciate. Finish in 30 seconds with each one of you. Most interesting initiative or company in open banking that you mentioned or you want to mention. So I'll start with David, and you have only 30 seconds, because after that it's going to end.
Oh, this is tricky. There are so many I get to do that are
you have
amazing.
30 seconds, David.
30 seconds, okay. So I'm going to pick a debt advice organisation on the basis that is making a real material difference. It's using all the functionality of open banking in terms of speed of access and accuracy of data. It allows then the debt advisors to really concentrate and spend their time on helping vulnerable customers where it really matters. There we go.
Thanks, David. Emily?
Very difficult. I think I suppose it's just a personal interest, really. I think that, and again, I think others have really touched on this, but I am very interested in the broadening out of products and services to those customers, both SME and the financially excluded, who to date have not been able to benefit from the full range of services.
Okay, thanks. Felicia, Ross, Chris, you have 30 seconds.
So
we
from
have 1 minute
side,
to go.
It's the large-scale distributors, financial institutions, banks, wealth platforms, wealth software providers and insurers who are now looking to deploy open banking solutions for the benefit of their clients and as well for their back-end processes, which we often don't see but create huge friction and cost. So bank reconciliations between large-scale systems, solutions for automating product prompts and so on.
Thanks. Sam.
Well, really just to say, I think with no time left, to everyone on this webinar that we're doing at the moment, which there's 610 at the moment, which is brilliant. I think we've got to make the difference. That would be what I would leave everyone with. It's up to us, every one of us, to make a difference.
Thanks, Sam. Thanks very much. Ross, Chris.
I agree with that. Sorry.
I have to be independent because we've got 15 participants in the Open Up 2020 challenge, so check them all out. They're all terrific. It includes MoneyHub. So yeah.
I would say just on that, I would obviously promote Visible Capital's product, which is going to save advisors time, money, and be more compliant.
Okay. No, thanks very much. Thanks a lot for joining us today. Thanks to all our speakers. Thanks to Innovate Finance. Really learn a lot. And the next webinar is actually at 3 p.m. about global perspective on cross-border finance for inclusion. So I hope that you enjoy this discussion with all of the speakers. And I wish you a very good afternoon. Please stay safe and stay at home. And bye for now. Thank you very much, everyone. Bye-bye.